Good morning, everybody. Mike Vaki, Princetontrader.com here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, daily chart of the ES, and yesterday's candle here you can see. We went down and we touched the lower band down at 1732, made matching lows, new lows by a tick, but matching lows with the Monday lows, and then spent the rest of the day above the lower band. So effectively, we spent the entire day inside the bands, which is what we were looking for yesterday with respect to the things that the bulls needed to do to kind of turn the ship around. What I was telling my subscribers last night was that the next step in that process was that today, without fail, the bulls had to trade above the Wednesday highs of 50.75. Well, that's already happened. We've already done that. It didn't need to be in regular hours. It can be in glow. It needs to be above on this chart, and it is. So now what? Well, the bulls have an opportunity to put a couple of days together. That's all going to get muddied up with the jobs report tomorrow. So we'll have to see if they want to do their standard variety, walk it up into jobs during the course of the day. On the downside, you've got 44-45 area, which has been problematic for the bears. You see it here. Consistent support. Once we jumped over it, after you had the move lower, you had this ISM come out, and everybody, that's the most excited I've ever seen the market get over a 53, 54 ISM number. And I think they kind of got ahead of themselves there, and the bears took advantage of that and moved it lower. A nice little trade in the room down from 48. But here's the key, and I drew this circle for my folks last night. People get upset. Oh, I didn't buy the 32. Well, of course you didn't buy the 32. That thing's an anvil getting thrown out of a window. Of course you didn't buy the 32. If you bought the 32, you're taking your life in your hands. But there's no reason not to buy when we make a higher low like that, because your risk is defined. So we got long 36. I still have some from 36. It's I've taken all the profit I'm going to take, and I've rolled it all the way back to a 37 stop. So basically a free ride. My risk is out, and I'm just going to let this go. I'm going to do other things, but I'm going to leave this alone and see what it can do, because if the bulls get it together, and if jobs doesn't knock them off the pedestal tomorrow, the next logical destination, if we do get some kind of a rally over the course of the next week or so, is going to be to test the middle band. That's what markets do. We had tight bands. We fell out of those bands. We parked the lower Bollinger Band ride. We nailed it, 10 days worth. Now we're getting back inside the bands, and we have to look for the next logical destination, which is middle band. And you can see now it's testing that 44-45 area. So we've got to see what this does. If 44-45 continues to be consistent support, let's see what it's doing. Okay, traded right down to the 44, and 44 is trying to hold up. So this is just what I was talking about 30 seconds ago. This 44-45 is a problematic area for the bears. They have to get through that today. Below that, you've got the purple dots here. That's the daily pivot. So, what markets do is they trade from band to band. And the next stop is the middle band, because at middle band, the market has to decide. And you can see the middle band is going to drop rapidly to meet price because of all of this dump out. And all the middle band is a 20-day simple moving average. So you've got the last 10 days or lower, so you really, it's already started to dip. You're going to see it dip even further. So I expect price to meet the middle band. And that's high noon, so to speak, in the market. At that point, the bears are going to really have to decide what they want to do. Do they want to control this tape? If they want to control the tape, the middle band will become resistance, and we will continue to trade consistently below middle band. We haven't seen a consistent trade below middle band in a few years. But they'll have their chance once again to go ahead and do that. If we lose middle band, if it becomes support again, then it looks like the bulls have done kind of what happened in June, where we got this little bit of a retrace. Saw the retrace, and then we were back up, making consistent highs as we went. So we'll have to see. But the logical destination over the next week or so is a trade up, not straight up, but a steady move up to meet middle band wherever middle band may fall. So unless I get taken out at 37, I'm going to keep that long on and see what the decision is up at middle band. Okay, everybody have a great day. Follow me on Twitter, Princeton Trader. Check out the website. Come check out the chat room. Come trade this stuff with us. Why trade this stuff by yourself? It's not easy stuff to trade. We got a great group from a lot of different areas of the market. Volume profile and technical analysis, and we got Jack in there, Spring Heel Jack, doing technical analysis and a lot of other proprietary stuff that we have going on. And come check it out for a couple of weeks. The people that come check it out tend to stay. So do yourself that favor, and we would love to meet you. Okay, take care, and I will check everybody out tomorrow morning. I will do a webcast after jobs in the morning. Trade them well.